Good morning, traders. Welcome to this live currency strength indicator table video with me, John, on this Wednesday, the 19th of July. Tables are a little bit different compared to yesterday. Obviously, yesterday was nearly a full board. Today, we've only got a couple of currencies still showing that there is confluence. So a lot of change around going on in the markets at the moment, especially on a day trader's point of view. So on the short-term point of view, we're having a lot of change. Now you can see that the Swiss franc still remains the strongest currency out there on both tables, so that's still going to be somewhere where we want to focus our attention. And we can also see the euro is the strongest as well, so looking to potentially continue that euro strength that we've been talking about in these past couple of videos. So want to continue to look at that one. From a day trader's perspective, Kiwi is the weakest currency. That combined with the pound as the second weakest and yen as the third weakest. So completely opposite to really the trend traders, where we've got dollar as the weakest, we've got CAD as the second weakest, and Aussie as the third weakest currency. So we're going to be looking across the board on mainly on some Swiss and Euro pairs, and I'm actually going to kick it off with Euro Yen. We're starting to see a little bit of risk on coming back into the markets. And if we look at this 4-hour time frame here of Euro Yen, we can see that price has started to make higher highs and higher lows here, and we've recently just come back into these kind of previous structure highs at the 157, and we're starting to get a little bit of a rejection here. But I do quite like the opportunity for this market to head perhaps back to these critical highs at the 158 handle, which formed most recently in the beginning of the month. So I'm looking to potentially see, can price pull back into an area of interest for us and then continue to press back up into that 158 handle. Now looking at the lower time frame, I've marked out a little bit of an area which are those prior highs at the 156 spot 30. You can also see I've got some confluence there with a trend line support where we've anchored at the low here of the 12th of July, and that expanded forward. You can see that we're breaking it through, or it's kind of piercing through that 156 spot 30 handle. What would be nice is if we had the 50 moving average to kind of help that. So if we had the 50 rolling through this area, we've got kind of like a 3-step confluence at that 156 spot 30, which could be the area where price continues to move to the upside from. So 156 spot 30 is the one to watch, I think, here for Euro Yen. I'm going to be looking to see if we can try and get on an entry here for a move up to that 158 handle. So like I said, the Swiss franc is still one of those currencies that are strong at the moment. Now we are going to take a look at dollar Swiss. I was speaking to Charles about dollar Swiss this morning, and we were just discussing the fact that where are we going to enter this potential beast of a move that could potentially come, because we were looking at entries around about the 87, 80s recently. However, price has just moved sideways. There's not really any sort of momentum that's driving price back to that point. And if we go to a weekly time frame and zoom out, we've got some real potential downside, including the 82.50 and even beyond that, the 7200. So if price is going to drop dramatically, you know, we've still got, you know, 400 pips to that area and even 1500 pips to this major low that formed back in July of 2011. So there is some scope for some downside. It's how are we going to try and get on the back of this. Now there's a couple of options we're still thinking of. There's either we've moved our position now to potentially look for an entry at these highs, which if we just move that down, is in and around the 82.30 area. If price was to spike through that, it might reject and then continue lower. Alternatively, we're looking at these lows here where price could potentially break and retest. So one of the things that we tend to look for is that if we're not getting that pullback, is the market going to move sideways? Is it going to break and retest before considering a move lower as well? Now, this second option is the safest option, because what we're doing is waiting for price to agree with that bias instead of looking at kind of an entry where price has got to go against us to get involved. And there's pros and cons to each version, really. The pro to the second option is waiting for, like I said, that bias to be confirmed. The only con to that is you're giving away some of the reward potential if you're looking at that from that point of view. Whereas it's the opposite on the first option. If price was to pull back into the highs there, we've got a better risk to reward ratio. The negative is you're entering as price is moving against you, it's moving higher. So a couple of different options there for you to just kind of figure out and have a little look at for yourself. Another market that was quite interesting to us this morning was Kiwi Swiss. We were looking to see if we could get an entry into the downside here. The only problem is we've got the all-time lows at the 0 spot 53 handle, which is only 56 pips away from price at the moment. We've got a 54 pip ATR, so the only way we can make this one make sense really was to look at an entry maybe back at the 0 spot 54 handle. That would give us a 40 or 50 pip stop loss, but it would give us a 100 pip target. So that's how we can get the 1 to 2 risk reward ratio there. Problems with that, the only thing is we need Kiwi to strengthen, which would then bring price in to do something like this. And at the moment, Kiwi is looking very weak. Obviously, it tops our day traders as the weakest currency. And if it was to kind of move up from here into that week on the trend traders, then probably price has already dropped down to the all-time lows at the 0 spot 53 handle. So there's that consideration as well with this market. So it's a bit of a tough one to call today. We obviously have some open interest on euro dollar and euro CAD, so I'd understand that if you were looking at euro yen, it may not be something you're comfortable with adding risk into. On the other hand, you've got good reward, you've got good confluence here for a potential upside. Kiwi Swiss doesn't really have the risk reward ratio where it is right now. It needs to have a decent pullback. Dollar Swiss, I think overall has the better option for a higher return if it does clear through those levels. So it's a bit of a catch-22 moment at the moment. We're trying to figure out our safest entry points for these markets, but we're gonna have to wait for some kind of impulse, I think, or some catalyst to come in at the moment before we start really firing on those positions, I think. But something to consider today, and I hope you enjoyed the video, and I will look forward to speaking to you in the next one.